The air in the room crackled with tension, thick enough to cut with a knife. On one side of the imposing mahogany table sat Donald Trump, a man who had built his presidency on the promise of America first, a doctrine that seemed increasingly to mean America alone. Across from him, Prime Minister Mark Carney of Canada, a figure often underestimated but possessed of a quiet steel, a pragmatism forged in the fires of global finance. The flags behind them, American and Canadian, seemed less symbols of alliance than markers of opposing territory. The smiles were strained, the handshakes perfunctory. The cameras flashed, capturing a moment of manufactured cordiality that masked a deepening rift. Trump, ever the showman, launched into his well-worn script, a monologue about unfair trade practices, about how Canada had been taking advantage of the United States for years. He spoke of deficits and imbalances, of jobs lost and industries weakened. He painted a picture of economic devastation, a narrative designed to justify his aggressive tariffs on Canadian steel, aluminum, and even energy. Carney listened, his expression unreadable. He had heard it all before. He knew that behind the bluster and the bravado lay a deep insecurity, a fear that America's economic dominance was slipping. But Carney also knew something else, something that Trump seemed unwilling to acknowledge. The world was changing. The old certainties were crumbling, and new power centers were emerging. While Trump obsessed over bilateral deficits and protectionist measures, China was quietly but relentlessly expanding its global influence, offering trade deals and investment opportunities to countries eager to diversify their economic partnerships. And Canada, caught in the crossfire of Trump's trade war, was beginning to explore those alternatives. The seeds of this shift had been sown months earlier, in the wake of Trump's imposition of tariffs on Canadian goods. The Canadian economy, so heavily reliant on trade with the United States, shuddered. Industries braced for impact and layoffs loomed, but instead of succumbing to despair, Ottawa began to explore a new strategy: sectoral resilience. Rather than relying on a single, all-encompassing free trade agreement with the United States, Canada would pursue smaller, more focused partnerships with a variety of nations, targeting specific sectors like steel, aluminum, agriculture, and electric vehicles. It was a bold move, a calculated gamble, and it was precisely at this moment that Beijing extended an olive branch. Chinese officials reached out to their Canadian counterparts, signaling a willingness to ease restrictions on agricultural imports and expand cooperation in clean energy technology. The offer was direct. Canada could reopen its market to Chinese electric vehicles, and in return, China would relax limits on Canadian canola exports. For Canadian farmers who had been reeling from China's tariffs on canola, the offer was a lifeline. For Canadian consumers, the prospect of affordable electric vehicles was enticing, but the implications were far more profound. China was not simply offering a trade deal, it was offering Canada a choice. A chance to lessen its dependence on the United States and forge a new path in the global economy. And Mark Carney, ever the pragmatist, was carefully considering the options. He understood the risks involved in aligning too closely with China, a country with a very different political system and a questionable human rights record. But he also recognized the dangers of relying solely on the United States, a country whose leader seemed increasingly unpredictable and unreliable. The meeting in the Oval Office was a charade, a performance for the cameras. Trump continued to lecture Carney about the need for Canada to invest more in the United States, to bring jobs back to America, but Carney's mind was already elsewhere, contemplating the possibilities that lay beyond the shadow of Trump's America. Back in Ottawa, the debate raged. Was China a genuine partner or a strategic adversary? Could Canada afford to alienate its closest ally, even one as erratic as the United States? The stakes were dizzyingly high. A wrong move could cripple the Canadian economy, leaving it vulnerable to either American bullying or Chinese dominance. The decision rested on Carney's shoulders. He was a man of meticulous calculation, a seasoned diplomat who understood the nuances of international relations. He spent weeks consulting with his cabinet, with trade experts, with industry leaders. He weighed the pros and cons, the risks and rewards until the numbers swam before his eyes. The allure of the Chinese deal was undeniable. Access to a market of over 1 billion consumers, a chance to revitalize the struggling canola industry, and the opportunity to diversify Canada's economy were all powerful incentives, but the potential downsides were equally daunting. China's human rights record was abysmal, its political system authoritarian. Could Canada, a nation that prided itself on its democratic values, justify closer ties with such a regime? And then there was the question of American retaliation. Trump had already shown his willingness to punish those who dared to defy him. Would he impose even more tariffs on Canadian goods, crippling key industries and plunging the country into recession? It was a risk that Carney could not afford to ignore. In the end, Carney opted for a delicate balancing act. He announced that Canada would indeed explore the possibility of closer trade ties with China, including the potential deal on electric vehicles and canola. But he also emphasized that any such agreement would have to be consistent with Canada's values and its international obligations. He stressed the importance of human rights, the rule of law, and fair trade practices. It was a carefully worded statement designed to appease both sides while committing to neither. Trump, predictably, was furious. He took to Twitter to denounce Carney as weak and disloyal. He threatened to impose even more tariffs on Canadian goods, vowing to make Canada pay for its defiance. But Carney refused to back down. He knew that Trump's threats were often empty, that his bark was worse than his bite, and he also knew that Canada had to stand up for its own interests even in the face of American pressure. The backlash in the United States was swift and fierce, as Republican politicians accused Carney of betraying America. Conservative commentators called for a boycott of Canadian goods, but there were also voices of support. Some American business leaders recognized the potential benefits of closer trade ties between Canada and China. They argued that it could create new opportunities for American companies and help to stimulate economic growth. The debate spilled over into the Canadian media. Some commentators praised Carney for his courage and vision. They argued that Canada had to diversify its economy and reduce its dependence on the United States. Others warned of the dangers of aligning too closely with China. They argued that Canada should remain loyal to its traditional allies, even if they were imperfect. As the furor raged, a quiet shift began to take place in the Canadian economy. Canadian companies started to explore new markets in Asia, seeking to reduce their reliance on the United States. Canadian farmers began to diversify their crops, reducing their dependence on canola. And Canadian consumers began to embrace electric vehicles, drawn by their affordability and environmental benefits. The world was changing, and Canada was changing with it. Trump's trade war had forced Canada to reevaluate its relationship with the United States and to explore new possibilities. It was a painful process, but it was also a necessary one. In the end, Canada emerged stronger and more resilient, a nation that was more confident in its own abilities and more determined to chart its own course in the world. The experiment was underway. Canada was walking a tightrope, balancing between two superpowers, trying to maintain its independence and its prosperity. The outcome was far from certain, but one thing was clear. The old certainties were gone and a new era had begun. The first tangible sign of Canada's shift materialized in the form of sleek, surprisingly affordable electric vehicles gliding off cargo ships in Vancouver. They weren't Teslas or even Chevrolets. These were BYDs and Nios, brands largely unknown to the average North American consumer, yet poised to disrupt the market. The initial reaction was a mix of curiosity and skepticism. Could these Chinese EVs really compete with established automakers? Were they safe, reliable? The early reviews were surprisingly positive. The cars were well built, packed with technology, and crucially, significantly cheaper than their Western counterparts. Suddenly, electric vehicle ownership became a realistic option for a much wider segment of the Canadian population. Farmers in Saskatchewan, teachers in Nova Scotia, small business owners in British Columbia, they were all taking notice. Meanwhile, the price of Canadian canola began to climb. Fields that had been left fallow after China's initial tariffs were once again bursting with yellow blooms. Farmers who had struggled to make ends meet were now talking about expansion, about investing in new equipment. The mood in the prairies shifted from despair to cautious optimism. Washington's response was predictable. Accusations of unfair trade practices, of currency manipulation, of intellectual property theft flew thick and fast. Trump threatened to impose even more tariffs on Canadian goods, targeting the auto industry in Ontario with particular venom. He railed against China's growing influence, warning of a new Cold War, a battle for global dominance. But this time the threats seemed to carry less weight. The Canadian economy was proving to be more resilient than Washington had anticipated. The diversification strategy was working. Exports to Asia were rising, and Canadian companies were finding new markets for their products. The sting of American tariffs was still felt, but it was no longer a crippling blow. The real damage, however, was being done to America's reputation. Long-standing allies were beginning to question Washington's leadership, its reliability, its commitment to free trade. The world was watching as Trump's America First policies isolated the United States, eroding its influence and creating opportunities for other powers to step into the void. In Japan and South Korea, similar stories were unfolding. Both nations, once staunch allies of the United States, were now exploring closer trade ties with China. They were wary of Trump's unpredictable demands, his willingness to use tariffs as a weapon, his disregard for international norms. The situation in Ottawa was particularly delicate. Canada had to balance its economic interests with its security concerns. It could not afford to alienate the United States entirely, but it also could not allow itself to be bullied into submission. The solution was a carefully calibrated approach, a strategy of cooperative competition. Canada would continue to engage with the United States on issues of mutual interest, such as defense and security, but it would also pursue its own economic agenda, forging new partnerships with countries around the world, including China. The goal was not to replace the United States as Canada's primary trading partner, but to create a more diversified and resilient economy, one that was less vulnerable to the whims of a single leader. The experiment was far from over. The road ahead would be bumpy, filled with challenges and uncertainties. But one thing was clear: the world was changing and Canada was changing with it. The old certainties were gone and a new era of multipolarity was dawning. And in this new era, Canada was determined to chart its own course, to be a player on the world stage, not just a pawn in a superpower game. The Maple Leaf was no longer just waving south, it was catching winds from every direction.